Okay, we're ready to start. I want to welcome you all to our I said I didn't update this right, our 2002 stock market forecast, actually. I should change that a bit, shouldn't I? There we go. So, the format today is rather simple. We're going to review first what we said about the year, and especially about the fall, for those of you that didn't catch it last time. And remember, of course, that after this, in about 2 days, we post this on YouTube, and that means that you do not need to make notes. Also, if you have any questions, rather than waiting till the end, which is when I'll deal with them, we do have a chat box, and you can type in your questions there. And please use it just for that, not for comments, but just really for questions, so that I'll deal with it at the end. So first we're going to review how well we've done, where we're off, where we're right. Then we're going to give some of our thoughts about next year, and then we'll take questions and answers. So very, very simple format. Okay. Well, 2021 was a lot like 2020. We had parts of it nailed down, mostly correct, and parts of it we had no idea what was going to happen. We don't find every market surprise. We just try to find between 20 and 30%. And if you have 20 to 30% of market surprises, you can make a lot of money, which is sort of the idea of this game. So we're going to just talk about what we think was going to happen. And the most important parameter I think that everybody has to keep in mind, and I've said this in every format, is it really is different this time. Markets are not like they were 20, 30 years ago. And there are 3 reasons for it. First is because of computers, you have things like negative bond yields, negative oil pricing, things that could not happen if human beings were totally in control. That's number one. Number 2, we have obviously the coronavirus, and more important, not so much the virus as how public health authorities are dealing with it, or not dealing with it well in many cases. But the key differences are threefold. The first is you have many investors for whom they've been in the market a year or two. They only think you buy on dips and you make money, although that's going to change and is starting to change. We have computer domination, so in very fast markets, up to 90% of the market are done by computers, not people. Remember, in the old days, you used to be in the pits in Chicago, and you could sort of see and feel the energy going back and forth. It's not the same. And finally, trading times, because of computers, are vastly reduced. So in the old days, if there was some news and people would project, say, a 20% move in the market or a 20% move in a particular stock, and it would take maybe 4 weeks or 8 weeks, now it could be 2 days, 4 days, 5 days, because the computers all have the same target, and they just set off the buy or sell numbers. So these are very big differences in how markets behave. Our main thing for the fall was we expected a correction either in September and or October. September was the highest thing. We did get 5%. We were shooting for 10, but we did get a 5% correction, and we did start to get a rotation in the market. So we get a B for that. We made some money on it, but not as much as we want. When it went for October, this was not the case. So October was a little bit of a give back. Fundamentally, I think we were correct, but the market didn't agree. So we had a small correction, but not necessarily in those dates. This, again, is the view, I think, of most people. In a given day, people think about just closing their eyes and just buying. Like, why was the market so down yesterday? Why is it up today? The news actually is not that much difference, but people are not really paying attention. They're paying attention to other factors, some of which we'll talk about. The most important factor is the Federal Reserve, which, as we know, is inflating like all hell. And you have a situation where we have inflation now at 5, 6, 7, 8%, and the Fed's talking about raising interest rates 7.75. That's a guaranteed lost situation. Now, of course, they're not inflating as much because as of March, they'll be done buying bonds, but they really put themselves in a box. Inflation is not temporary. We have actually stagflation light coming, but this is a big mess, and I don't think there's anything they can do anymore except some damage control, because we have inflation all over the place. And this year, coming up, a lot of people are going to be demanding raises a lot more than the 2% target of the Fed. So I don't know how much credibility they're going to have. Whoop, what's going on here? Whoops. Okay. Oh, let me put this into the slideshow. Okay. Here we go. That's better. Okie doke. And this is the result, that people are being squeezed. Now, if you're at the top of the pyramid scheme, hey, this is the best of all times. But if you're a working stiff person, if you're on a fixed income, and your costs are going way up, and we're not talking even 5 to 10% in many cases. My cat grooming, for example, went up from $100 to $150, and that's not so unusual. Then they're going to be squeezed. So the two issues we were concerned about was inflation and taxes. Well, we got inflation, we didn't get taxes. So we definitely have inflation. As for taxes, it's unclear. I mean, we do need them. A lot depends on whether we have to pay $2 trillion plus dollars. And if the debt goes up there, the average person is going to be $45,000 further in debt, which means me and my wife now are $90,000 additional debt just on that one play. So I certainly hope it doesn't happen. But taxes are still an issue, but inflation certainly is here. What are the issues that present problems? Well, inflation is one. The one that we're going to see coming up are the meme stocks stumbling, because a lot of them are down 25%, 50%, 75%. And this will start changing some of the newbies' view of how to handle the markets. And a year or two from now, hopefully they'll be a little bit more discriminating. And Bitcoin, of course, is another thing which we'll talk about in some detail, but if that collapses, that will certainly set things going. Bonds are definitely going to go higher, even though they're about 140, 145. Clearly, we're going closer to 2 plus. So shorting bonds is something we did quite a bit, always was successful. But remember, when the market's way down, people are buying bonds, so you have to cover it. Like yesterday, for example, the bonds went the other way because people were buying it, whereas today, with the market way up, they're letting go of bonds and buying stocks. So it's not something you can just hold without hedging. So basically, and then of course China. China has done some incredible things in Hong Kong and elsewhere because they're very not concerned with how these companies are making money. We've got Evergrande. So there are lots of issues in addition to Chinese aggression that presented lots of problems, and a lot of people have lost money on that. Not us, but a lot of people. So I personally went on a buyer strike a while back, and in the market over 4,000 S&P, I won't play. So we had some tests yesterday of the 50-day moving average of around 4,600, but we think we're going to go a lot lower, and we'll talk about when that is in just a few moments. So what are our parameters? Well, we use 5, there could be more, that are warning. One, of course, is the bond rate, and bonds will go back up over 150 because they're going to have to. Now, whether it's now or whether it's in May, certainly they're going up. And once that goes up and interest rates go up and credit cards go up, it's going to present some problems. The VIX, which periodically gets above 26, it goes between 22, 26, and 30, is also a sign that the markets can reverse. And then you can take something like Tesla or Rhythm. These electric vehicle companies are going to make no money for many years, and yet they're put together more than Ford, GM, Volkswagen, et cetera. It's total nonsense when it comes to long-term investing, although from a shorter-term viewpoint and a swing trade, they can be very profitable. Bitcoin, as you know, went to 46 support. Once it gets below 44, which means it can get to the 30s, that will also shake up a number of investors. And then we have a whole bunch of things like GameStop, AMC, Coin, all of which are meme stocks, some of which are losing money, and I think they'll lose more money next year, which again will change market dynamics. So these are some of the things we look at when things get very, very scary. So how much upside? Well, according to someone like Goldman Sachs, we can go up to about 5,000. That's possible. Others are saying we're going to 4,400 on the S&Ps. I think we'll go lower. But is the risk-reward appropriate? And I'd say It isn't, and it hasn't been for the last month or two, which doesn't mean the markets can't keep going up, but is it the right way to play? So what we gave last time, and we're going to give you some new ones, were 3 winning swing trades. The first was selling bonds, and we did that rather successfully, close from the 125 or 135 area up to 175, and then we played it again. So shorting bonds periodically is just a no-brainer. Anytime the market's up, and for no really good reason, just shorting the bonds. One. Then we had the fall sell-off, and we got the 5% in September. October, we just lost a little. And, of course, we had a good silver move from 22 to 25. So, basically, we got an A- on this. So, I think that was worthwhile. What were our strategies for the year? Distressed investing, no-brainer. Day trading, long-short, we like that. Seeking safe havens, they did okay. The first 2 certainly did well. Doing things like tips, which actually did well, dividend stocks, REITs, they didn't outperform since they're a bit defensive, but they did all right. Commodities, of course, we traded a lot. We still like commodities, and we'll talk about it. So most of the favorite sectors had enough movement in the stocks that we were playing to provide over-index returns. And then finally, to be cat-like, which is something very important, was playing copper. And when copper was down, we were buying the hell out of it and made some money. Then when it went way up, we let go of it. We didn't short it, but we let go of it, and now it's way back down again. So that was a good series of plays. And I'm sort of proud of my Bitcoin, which I think is nothing but a pyramid scheme. Doesn't mean you can't make a lot of money trading it. But if you look at number 5 and 6, we made it, and we made very well, 10 to 20%. And some of these trades were astrological, some of them were technical, some of them were fundamental. So all the technical and astrology ones worked, half the fundamental ones work. Just remember this about Bitcoin. The governments do not want competition for their digital currencies. They don't want money laundering, and they don't want terrorist financing. So it's basically illegal in China. Russia's making it illegal. India's making it illegal. Turkey makes it illegal. El Salvador goes the other way, but that's not a country that I want to really invest in. And so a lot of it's moving to the United States, but I think while it can last, Bitcoin itself will not do as well as some of the competitors, some of which will go to zero, some won't. So, take a little breath. That was sort of a quick review of what we've done, and if you like, we have that all posted in much more detail on our YouTube channel. So what is coming ahead? That's really why you're here, and that's what I think you want to know. Just 1 second. Let's see what this is. Okay. So again, if you have questions, please feel free to put them in the box, and we'll give our opinions on it. So, what's 2000 going to be? Are we going to see 5,000? Are we going to see 4,000? Is oil going to be 60? Is it going up to 90? Is gold going down below 1,800? I've been seeing 1,500 targets. Is it going up to 2,200? And Bitcoin, is it going to go to 100,000? Very unlikely this next year. We'll even do the top. Or are we going to see support at 33 again? These are the questions that we all have. So, I'm of the agreement that we're going to see stagflation light. And what is stagflation light? It means we're going to have inflation, certainly, at times. Sometimes it will back off. And at best, 2-3% growth for lucky. Times we'll have that every time they have a coronavirus thing that knocks out a point, 2 points. So stagflation light, which is not really a wonderful time to be into markets as investors. So part of it is there a number of, I'm sure you can name your own, of crises that could sink this market, 20%, 30%, or more. We can name some. Or will we just inflate because stocks, like real estate, can be a good hedge against inflation? And my guess is we're going to see both. We're going to see some big crises, and we're going to see some big inflation. Of course, the question is when, is it not? So before I give you my details, I want to give you 3 winning swing trades. So if you're bored, you can rush to your computer and make some money. The first is to buy gold before January. We think gold's going to be strong out of the gate in January. So if I take a quick look at gold right now, gold, as we're speaking, is about 1787. It's got support in the 1775 area. Anything under 1800 is my viewpoint of buy. So the first thing I would do is, if you don't have some gold as a trade for January, I'd buy some any time in the next few days. Next, we recommended selling the market in the second half of December. Well, that's already in progress. It's making money, but we still want to be short for next week. Not necessarily the first day or two, but for the end of the week. So if you're not short, and let's see what the market is again, we're talking just barely over the 50-day average. You could hit it here, or you could wait, because we are in Christmas time. But I think you want to be short next week, if not a little bit beforehand and a little bit for next week. Okay, wait a second. Where did my swing trades? Oh, hold it. I seem to have misplaced something. Oh, there it is. Okay, and copper or silver on weakness. Both of these have strong fundamentals. Copper because of the EV play for other reasons as well, and silver for that and other reasons. So we're not buying them here, but whenever, and we'll give you our support numbers a little bit later, but on weakness, you buy copper and silver. So those are what we consider 3 winning trades. When we do our next seminar, we'll tell you how much and how well we did. But this is worth the price of admission. Okay. Today, it's what meet Murray. It's worse than before. And I think it's well past time to worry, because the thing that's been holding the markets up is the Fed, and the Fed's finished. So whatever you want to say, they can do a bunch of things, but you better start worrying if you're not. And I think a lot of people next week, if they're not doing it this week because of Christmas, will really want to be a little more defensive, a little bit more cash, and a little bit less wild, especially the newbies who are going to find out that many of the games they've played are losing money. Most people know how to buy stocks, but they don't know how to sell them and when to sell them. And I think many of the people here today have, not necessarily my audience, but many people of the new investors don't know how to sell. And until they learn that, there are problems. That doesn't mean you can't trade it positionally, doesn't mean you can't trade even Bitcoin, make a lot of money on the long side or the short side. But whether these are long-term investments is a very different ballgame. We changed the numbers. Obviously, bonds are going lower, and I think you can get 140, which we did the other day. You get 135, 138, but we are going to 185. But you got to play that either as a single play or as a series of plays, and that's something to worry about. The VIX at 22 and 26, we've mentioned before, and these are basically the same things. But these are things that when 3 of these are going at the same time, you better worry, because then the risk is extremely high for a 10% move in a couple of days or even a single day. That's what I mean by reversal, not a 3% day, which, you know, we're getting 2% days. Now, 3% day is nothing. I'm talking about a limit down day. You get a bunch of these, and it's a warning sign. It may happen, it may not happen, but you better protect yourself, and certainly not be in a lot of margin on the long side. So what are the positives? We've lost a lot of positives. The first is the Fed and central bank policies are no longer accommodative, and they're no longer, they're overstimulating. So they're a big, that positive is gone. The vaccine, which everyone was worried about, now we know it doesn't work. You need 3, maybe 4, and even they don't work, although there is some good news, quite frankly, with Omicron. And there are alternatives. Fear of missing out, I think, is a little bit less strong than it was. Obviously, people want to buy on dips, but it's not as strong. The big change I think we're going to see on the negative side is inflation is going to be much, much greater. And the meme stock and crypto could be collapsing. So if they get underneath and people say, I can't own this anymore, that will be a very strong signal for the market. But again, things will change. People will buy different things. The world's not ending, but it's changing. And just as we've already had one rotation, we'll be having one or two rotations next year. So I'll leave this up. It's the same material as before, but you could add many things to the plus side. You can ask many things to the negative side. And the question is, when do people look at it? Okay, technically, of course, we're looking at the 20-day and 200-day moving average. So roughly on the 46 level, this was done a few days ago, but it's roughly the same thing. So roughly around 4,600, and on the 200-day, 4,300. So as long as the 200-day average is intact, people will stay bullish. They get worried as traders when they get under 4,600. But if we get under 43, there's no reason we can't drop another 10% or more. And I think there's a good shot for that. Possibly even as soon as next week. Our view of gold is the same. We like it. I'm a Leo. What do you want? I still find it amazing that when there's inflation of a certain type, that computers are selling gold. It's true that the dollar gets stronger under some of those circumstances, and therefore commodities can be a little weaker, those that are done in dollars. But nonetheless, almost everybody who's a gold investor uses it because they're interested in inflation protection. So to me, it's a very strange situation. I think that will change next year, although when we make our money in January, and we expect to make a lot of money on the gold trade, we'll be selling some of it. Because as you see, if you don't take your profits right away, they disappear. If you were short yesterday and decided not to take some profits, it's already gone. So you take at least half profits when you're trading. And then, of course, the issue of Bitcoin, when it meets reality, it's illegal in India, Russia, China. I think if and when it goes down, which maybe will be next year, it may not be just Bitcoin, because there are other coins that are better, obviously, that have more utility. But, people are making a lot of money doing it, and as long as they're making money, they'll keep it up. But again, effectively, the governments do not like this, and it's likely to come down stronger on Bitcoin. Gold and silver, I've repeated myself here. Gold's worth about $1,868, so it's gone up a lot this year from about $1,800. We're trading well under fair value. I can't say that's the case for many stocks. It has support around the 1770 level, and around 1930 and change we have resistance. So I think that's the basic trading range. There are people with lower targets and higher targets, but this is the range that we're actually looking for. Everything here is pretty much the same. The difference is the numbers have gone up. Its value as inflation has gone up, and that may go up again soon. It's crisis metals there. It's a currency. It's stronger. So we think probably we'll see it about another $10, $20 more valuable. Silver is more undervalued because gold's under pressure. When it's under pressure, silver goes lower. When gold's up, silver goes up. It's worth about 25, 26. That's supported 22, and some strong resistance 26 and 30. But we think, again, on any sort of weakness, it's worth buying, and certainly the stocks. And again, if you look at number 5, the middle stocks will outperform, especially if you're trading, and on a day that you see gold or silver up, you'll see certain stocks, and you can track your own, will be a 2x or 3x to the actual physical. So our current trading is basically gold. We buy on dips, close to support. We'll give you these numbers in a moment. Silver, we buy on dips. Copper, we let go when it was much higher, but if it gets hit, then we'll be buying it and accumulating it. Obviously, has a lot of support around 420, but if it goes underneath, then we'll certainly want it. Now, oil's rather interesting. We played it very well on the long side, the short side, etc. There are mixed factors for oil, but it will go up again. But I think it's held at 66 very strongly. So now it's got very strong support, 60 to 64, and you want to have it for second quarter. So, and oil or energy stocks. The problem with energy stocks And green energy is positive. If we're talking about classic ones, even though they're having wonderful profits, they're being dumped by a lot of pension funds and a lot of governments. So while the fundamentals are much better for many, many, many oil companies and energy companies, you have a mixed bag there. And finally, U.S. bonds, because we just basically want to sell it to at least 180. Again, knowing that when the markets go strongly down, we have to protect it or let go and do it again. But in general, under 140, you certainly want to sell it and walk away. Now, one of the things you want to think about is what's the very big picture astrologically. And in astrology, Jupiter, Saturn, which were the original two planets, were the business planets. And every 20 years, they set up a new paradigm. In the year 2000, it was basically the world was becoming more global and telecommunications was more important. And it certainly has changed the world. But what we have today is the exact reverse. From the 220 on, we have deglobalization. So we have decentralized connectedness, and with the IoT, we had space. But there were two things actually I left out before. One, of course, is DeFi. I'm not a big believer as much in decentralized finance, but DeFi is very popular among a lot of people, and that will continue to be so. And of course, robotics, which now I think is increasingly important because of a number of things, the cost of labor and the scarcity of labor. So robotics, I think, is one of the areas we're adding, which we should have been paying attention to. And DeFi, you certainly can make money on it, one way or another. Now, this big cycle is in the sign of Aquarius, but it's one Aquarius. For those who know what Aquarius is about, it's part of this socialist view that we have about peace, love, and brotherhood, but it's also issues of the Orwellian state that we're seeing and which we're fighting at the moment. So like all signs, it has positive and negative qualities, but it's the very, very beginning. It's got hundreds of years to go, folks. It's not next week. Again, this has to do with building structures to protect yourself. And think about it next year. Don't you want protection? I'm not saying you have to go off the grid and go somewhere, hide in the hills and have, ammo and stuff. I don't think it's going to be that bad. But you do want to have structures that support you. So basically, well, that's what we've already said that. Now, let's talk about the astrology dates. In our last format, we showed the February and June where there was slight movements down, enough to make a little bit of profit. But look at this thing about December 24th in red, which is one of the reasons we started going short the market on the 15th, and it's one of the reasons why post-Christmas we're going to be short. In other words, how do people deal with next year? Now, will there be more taxation? Maybe, maybe not. But certainly the winners of last year will not necessarily be the winners of this year. So next week, if you haven't done anything, I mean, I've been selling now, but we already have high cash levels, is that big red line. And we don't use red. We tend to use more yellow. So next week, there's tremendous risk. You may want to even buy some put protection sometime this week. Then upcoming, we have something in April that's rather interesting. It could be very inflationary. Oil could go to the moon, in a sense. Or we may just have a report that says we have 8 or 9, 10% inflation and the market goes crazy. So we also have the issue that the market could go way up. We haven't decided that April period. It's a very critical time, that spring period. We may have a lot of inflation in the market, or it may be shooting things down, but energy will do well. And then we have some unfinished business in October next year because of this Saturn-Uranus square. Those of you astrologers know what it is, but it's basically challenges that are going on that's unfinished. So, but the big thing is next week. Next week. Red alert. In the astrology, we have basically the end of December, still now, so that's a good trade. Gold is generally positive, but mixed next year. But January is a winner. Silver and copper is more positive than negative, but they'll get hit at times. Oil has a lot of support at 60 and 66. It also has now that the Mideast is sort of holding themselves together. So we'll be buyers. When it was way up there, we're sellers. When it's lower, we buy. And we like to trade it. and we like to trade extremes. So I don't think we're going to go lower than these numbers, but we certainly will go to the 70s. And bonds, of course, our favorite is anywhere in the 130 to 140 to be selling it, both positionally and short term. China is still a mess. We have the Olympics and the reaction to the Olympics, and more important, Xi's in October, where he wants to be reappointed for the next 5, 10, or next 10 lifetimes, and that is going to affect China very much. Obviously, they're showing they don't care about their company's profitability. They have a new scenario about them giving back, which by itself is not a bad thing, but the way they're doing it, I don't necessarily approve. And remember the Saturn-Pluto aspects that we had recently. It was the same as what we saw in 1947. In 1947, which was basically more or less the beginning of the Cold War with Russia, and now we're in a Cold War with China. So that's not going to be over in the next year or two. And it's something that has to be watched quite a bit, and you have to be very, very careful about China trading. So let's take a look at some numbers. On the Dow, of course, when it's below 35,000, we should put a K in there, shouldn't we? Oop. Oh, what happened there? Uh-oh, sorry. Let me go back. Slideshow. How do I do that? Whoop. Oh, there it is. Okay, so I'll have to correct it later. 35,000 underneath, you basically want to be short, but you got to watch it because you see they're still playing with those numbers. And above 36,000, you could be positive. S&P 4,600, the 50-day moving average is the critical one we have to watch, and then we'll watch the other levels later. But that's the basic one you should be watching next week. NASDAQ is safe because it's above not only the 15,000, but the 14,800. Once we go below that, 14,000, 12,000 certainly could happen. Gold, we've given the numbers already. That's 1770 to 1930. Silver is in an interesting range. If you get back to 22, 23, which is sort of where we are, you might want to have some, but that's not the only thing you want. Oil, 66 is still pretty much the support levels, although it will go down over time to 65 and 64. Copper, although it's much higher now, 4 is pretty strong support, but when it breaks that, I want to be a buyer. Bonds, obviously, at least till close to 2. It's how it's not going to go there is beyond imagination, unless we go into a severe depression, which I don't see. The Chinese yuan is sort of in its trading range, relatively strong. And Bitcoin is holding 44 support. It held the 46 level. It's playing with 50. Actually, let's see where they are from Bitcoin in a moment. Okay. Yeah, it's around playing with 50 overhead support. So you look at 50, 46, and of course the 47. Actually, about 48 is the pivot point, but 46 support's been holding. Once it breaks, 44, but once it goes past 44, then we can see the 30s, and that will change people's minds. So those are our numbers. They're sort of very logical ones. They change over time, obviously. Chinese year, this particular forecast we had was quite wrong, that 221 would be a better year for all the Chinese signs. Well, it clearly was not a better year for the Chinese stock market or for many of the markets. This was not my forecast, though, but this particular person was wrong. So much for that. And what's interesting, the same person who was wrong last time is suggesting because water is wealth and it gives abundance and prosperity, maybe, but that is true is that some are going to lose huge fortunes. So be very careful about that. It's an insider's game. If you don't have someone telling you in advance what's going to happen, which happens a lot in Shanghai and Hong Kong, and you're the last to know, you know what happens. So be very careful. Political climate rules everything. Economics has nothing to do with anything by and large. It's the politics. And unless you know what's going to happen, which I don't, stay away. Indian astrology did very well. The Times of India talked about pharmacy and IT sectors being the best, and were they not the best this last year? They talked about things good from January, but look what they have to say about 222. That basically 222 is basically a decline in the share market. So I'm not going to change their forecast. They were absolutely right, more or less, in 2021, and I think they're going to write 222. I think the markets are going down, not up. There will be some up times, maybe even in the May time. We may get to see Goldman Sachs' 5,000, but I think the numbers are more likely down, more likely by next week to start to go that way. What are the actual valuations? I'm a fundamental player. I like to consider myself a cosmic investor. So copper's worth about 415 to 440. Underneath, it's a buy, although I want it cheaper. Oil's in a trading range anywhere from 64 to 77. It belongs. If it gets higher than that, and it probably will, we'll be selling it, although it depends, because it could go to the 80s. Oil, if it gets below 64, 60, we'll certainly be buying it. Gold under 1868 is a buy, but it's also an investment hedge. For us, it does both. Silver under 25, S&P under over 4,000, I think, is ridiculous. The NASDAQ over 14 is ridiculous, but again, it's where people put their money. Bitcoin has no value whatsoever, and U.S. bonds under 175, it just make no sense. So we have a lot of improperly valued stocks and commodities, but it doesn't matter. They can stay improper for quite a long time until reality hits. So what are our strategies going forward? First, inflation protection. Clearly, that's something that's important. That means gold and hard assets, because if things inflate, try buying a car today. You've got to pay over list price. If I told you 3 years ago you'd go to your dealer and have to pay, in many cases, $5,000 or $10,000 over the list to get a car, you'd be sort of saying, well, are you crazy? Where are you negotiating? But you're lucky if you get list price. So hard assets, basics, utilities, low-end situations like you have to eat, or if you want to shop, places like Dollar General, but also luxury and ultra-luxury items. And if you looked at last year, when things went sort of positive, they scored. So fine art, wine. But if you're looking at, for example, buying a yacht, or if you're looking at Winnebago, these things are locked up for years. So they have profitability. Of course, it's a question of what price you're buying, but at least in terms of outperformance, they'll do well. So you look at the top and the bottom, should do well. Private equity, if you buy well, always does well. It's non-correlated. Tips are going to do well over time, although shorting bonds, I think, is more direct. But when markets go strongly down, like next week, you probably have to cover or protect. Now, blue chip stocks that make a lot of money are going to probably benefit from inflation. The question is, can you pass on the inflation? So now everybody's happy with banks. And as long as we're under several points, 4%, 5%, 6%, they're obviously going to make a lot of money. But if we go over 10%, they're not. So you got to watch it. If we have rampant inflation, which is one of the potential risks of that May period, this could be very difficult. But in general, they'll do well. And then there's real estate. But again, as interest rates go up, some real estate will go down. So you have to look at what you're looking at. Selectively, some will do very well, but there'll be many losers as well as winners. This is the difference. A bifurcated market. Indexing is not the game anymore. Not for 2022. Again, distressed investing in M&A is a winning thing. Obviously, day trading, long-short positioning, which we like a lot, does well. If you're long short, you can just hold it for a while and not worry about it. If you're day trading, then you better take your profits quickly or half profits, even if you're holding it overnight. Commodities, the two differences here, I think that the battery metals will be stronger as we get later in the year, and energy. So we've always liked the precious and base, but there'll be more emphasis on the battery metals, and on the energy. Those things are coming. So if you don't have them on your screen, watch them. The rest are things we like And again, technology always does well. So what's the focus that's different? Because that's the repeat of last year. The focus is, first of all, a bifurcated market. Everything's not going up. That game is over. So as we get to next year, there are going to be a lot of winners, a lot of losers. Next, many of the COVID winners last year will not be winners next year. So right now, everything's doing well with even some of the biotechs. I don't think they're going to do so well. This is a fundamental view, not an astrological view. I don't think they're going to do as well later. On the other hand, some of the things like FedEx will still do well. So I think some of the biology stocks, which are doing nicely now, are going to see that they're not going to do so well. But in any case, there are going to be differences. People aren't going to be home in the same way. This locking up people that they're doing for the next month or two, to me, is the end. A lot more defensive than we will be outperform more this year than it did last year. Dividend stocks, utilities, telecom, inflation protection will be stronger and recommended to be stronger. So again, defense. And even next week, I think you'll see them start to do better. Ag-tech is an area that is also very important. Vertical farming and robotics. That is to say, agricultural robots. To me, it's insane that people want to bring in all these cheap laborers from Mexico, when in 3 to 5 years it will almost all be done by robotics, and increasingly is being done by robotics. Hydrogen, of course, is a very important thing. While I like lithium and I like EV, I think the future is obviously solar and hydrogen, future being 5, 10, 20 years. But hydrogen plays are something you want to be in. Rare earths, I think, are important and will be important going forward, just starting to. Lithium, a little expensive at the moment, but clearly is a good area. And select EV plays after a correction. The valuations are just off the charts and insane. But once they correct seriously, which always happens, there's always a first level of going to the moon, things come down, and then the ones that survive are the ones you want. And again, 5% inflation is the floor now, it's not the ceiling, so gold will do well in this environment, especially with the Fed way behind, although there's a lot of people selling gold, so at times it will not be doing as well. But in general, it's worth having. But remember, with 5% inflation floor, maybe we'll see 10%. And to be cat-like, and for us, that means to wait for an opportunity to buy copper, silver, and energy on weakness. We're not playing them with momentum, because we don't think there's that much momentum there. But we do think that when they get undervalued, they're worth buying as positional trades. So the summary is always be selective. We like to use stops in our trading and in our investing. We like to hedge. 2022 is trader's paradise, but unlike the last 2 years, we can't give you a full view. We were able to do that in 2018. We're able to do that in 2019. We can't. So we have to play it very close to the vest and just look at certain times and places where we have a very favorable risk-reward. It's not an easy game, but there are some times and places that will be profitable. So we have a lot of precious metals. Stock selection is important. As I say here, you're never wrong to buy stocks with strong cash flows, sound balance sheets, and growing dividends. And I think those will be a little more popular. Active portfolios will definitely outperform indexes. That's without a doubt. So we'll go a little bit into some stocks. We've seen this before, so we'll just point out some differences, plus you can catch it on our webinar. The difference is battery metals are going to be more important in 2022 and 2023. Most of these are pretty early stage plays, but they're going to have more power to them. Energy, agriculture is new. And always you can do well with art and blue chips. So those are pretty much the same. Our mining picks, we have just so many that are good. And almost all of them will respond the same. 75% of what happens to a stock depends on its sector and the overall market. Only 25% is independent. But again, these are the same stocks we liked before. Eagle, DoD Gold. Gold Royalty is a new one because that's a new play. So you should take a look at that if you haven't seen it. Victoria Gold, Wheaton Precious Metals, some of the larger plays. These are not the top, but they're mid-size and relatively safe plays to own. On the smaller ones, same as before, we put them in a basket, and we like some that are very high risk, some that aren't. Again, these are pretty much the same list as before. We took a few off because they either reached our targets. We're value players, so when something becomes way overvalued, we're out of it. We're out. So these are some ones that we've had before. We added Heckler, which we didn't put in before, as a good silver play. The rest were the same, but Heckler's new. It's definitely one of the best silver plays if you want to just stick with something long term. The rest, copper. Again, we're looking more for when there's a pullback. Lithium is obviously flying very high. We like a lot of these plays more as holds, but again, if there's any weakness, maybe as soon as next week in January, we would be rebuying. Media is always good. Defensive picks we've had before, but things like Dollar General and Johnson & Johnson, and utilities and telecom, we'd probably wait on a little bit. Because again, over 4,000 S&Ps, I don't really want, I'd rather have more cash than stock. Now, healthcare was interesting. If you looked at recently, yesterday, for example, CanFit, one of our favorite stocks, doubled. Obviously, I don't see where it went at the moment, interestingly enough. CanFit. And then what happened is it went from $1 and change to $2 and change, and then now it's at $1.50. So you really have to trade these markets. Don't worry about paying taxes. I speak to some people, they're so worried about selling because they have to pay taxes. It's better to pay taxes than to have a loss. But obviously, there's going to be a lot of areas in the healthcare area. I think some of the things like Moderna are not going to be as strong next year. But that's somewhat emotional. We'll see if it's right. Clean energy, of course, will do well. We've talked about that. And robotics. We haven't done our homework there, but that's an obvious no-brainer. Okay. If you haven't done it, review your portfolio. If you think this game is continuing through January, you might be right, but you definitely could be wrong. And you should have a list of things to buy after things are 15 to 25% down. Many stocks already are. Most of them are probably not worth buying. Just bid for them. So again, what benefits from inflation? Gold, tips, utilities, art, blue chip, collectibles, and selective real estate. So we have a number of events in New York City. We'll do probably one or two more webinars. We have one scheduled in August. I mean, depending on what markets are, we may do something in January. So we're ready for questions. So let me go see what we've got. And if you haven't done it yet, please put it in the chat room. Let's see the first one. Okay, so put them in there. When do I think Bitcoin will drop? Yesterday. Now, Bitcoin's an interesting game because you have the forces in the U.S. and there are people like in Miami, New York, and Texas that are basically pushing it very strong. And then you also have, so we're just playing it technically. The last couple of things. I don't know when exactly. I think it's going to be less popular. It's not like Ethereum. It has no utility, so I don't like it, but there are a lot of people constantly buying it. So when it hits a technical number, we short it. That's all. Sorry to be we're still short. When will this be posted on YouTube? Probably tomorrow or the next day. I don't try to take much time. People are saying, do I agree when Bitcoin is down? I did the astrology for it initially. I'm really too lazy. It's too much work. Anyway, clearly there are so many better coins. The issue is stable coins, but the also issue is a lot of people are going to lose all their money in most of these junky coins, and who's going to have egg on their face? So it's a political issue. But I'm not, to me, I think it's such garbage. So it's hard for me to be objective. All I can do is when it hits very key points, recommend selling it. And don't put your life savings in it. A deflationary in the second half of the year. So that's very interesting. The question is what May is. The question is in May with that Jupiter-Neptune, whether or not how inflationary it is. It also depends in November. Are we going to have Republicans or Democrats in the government? Say, could we have a deflationary bust? Possibly. Remember, the Fed's got to raise a lot of rates. That's going to hurt a lot of people, but then it depends on what the government reaction is. I'm certainly cautious, but again, I'm not giving a full year's view because to me a lot depends on what happens in May. Till I see that, I really can't forecast for the second half of the year. Yeah, there's a good possibility of a pivot in the next week or two, and our time frame was mid-December, but mostly next week. So we're waiting to see what next week is and how it goes out in January. It certainly could be a lot worse, but it depends if Goldman Sachs wins first over some of the others. Whether they get that 5,000 first or whether they get the 4,400 first. As for Bitcoin leading the market, it does because people who don't know better or looked at it thinks it's wonderful. There's so many things wrong with it. We could talk for hours about it, but it doesn't matter what the fundamentals are. As long as people are making money and as long as the government and the SEC allows them to do it, they're okay. But once India and Russia makes it stronger, if the U.S. decides they want to do, or when they decide they want to do a digital currency, the game's over. But it could last. It can last. I can't comment except it's garbage. Okay, we've had a lot of questions here. I want to thank you for it. I'll be posting it in a bit. Again, I wish I could give you more specifics, but as you see, astrology tells you what the fundamentals are, what the reality is, but how people react to it is one thing. This is posted, of course, on our YouTube channel, so you just go to YouTube, Henry Weingarten, or YouTube Astrologers Fund. In fact, you can see our old posts there. We'll put it up there. I want to thank you all for attending, and again, be very, very cautious. We're getting into the later stages of the game, and the game is getting very dangerous. We may muddle through like we generally do, or we may not. Just protect yourself. Thank you very much. I hope you enjoyed it, and